Can you hear my voice? Alright, so good day guys. Today we can see it's a very choppy day, so I'll just go through like what has happened during this week and then we'll see where we are right now. So let's delete this chart. So first a top down analysis, right? Now monthly time frame, we had the XY tap this, a monthly fair value gap. Then after I tagged that fair value gap, we had sell side liquidity down here that it needs to go into. So yeah, we're supposed to have a run from here down here. Now what's happening is that price wants to retrace into a monthly fair value gap after tagging a fair value gap. It wants to retrace into a monthly fair value gap to before it starts selling. So we have this as our monthly fair value gap. And on weekly time frame, what's happening? That monthly fair value gap turns out to be, so this is what we call internal external range liquidity. So externally it is a fair value gap, but internally it is a double high, so it is a weekly, so equal highs, monthly fair value gap. So you have equal highs and monthly fair value gap. So that's the drawn liquidity. On daily time frame, that's still the drawn liquidity, which made our daily buyers what? It made our daily buyers bullish. Why? We have this low created here. We have a low created here, then a high, then lower low, then the high got broken here. So we had that created. So we know that the daily bias is set to being bullish. So now on a bullish daily bias, what are we going to look for? We're going to look for bias continuously our till our drawn liquidity gets plunged, and our drawn liquidity is this equal highs over here, which is the monthly fair value gap. Now to check foreign assets, let's see EUSD for example. On EUSD, what happened? So on Twitter, I logged in on Twitter and showed that this is going to be the price action on EUSD. We're going to sell from the 50% of the daily fair value gap, and we sold from there to here to the sell side liquidity, the daily bullish fair value gap, and relatively equal lows. So you swept that when we swept that on Tuesday. Now looking at the weekly profile we have here, what's going on? Let's see Forex Factory. So Forex Factory shows that this week what's happening. Let's set it to weekly charts. This week at last settings. So this week what's happening? On Monday we had the bank holiday, which was untradeable. On Tuesday we had CPI for card, and the governor of Britain spoke. Governor of Bank of England spoke. Then we had on Wednesday we had USD high impact news at 2:30 p.m. Now let's see how that impact news affected us. So the weekly profile we're working on right now is what we know the draw on we know the draw on of liquidity for the week has like been tagged, which is this fair value gap, the daily fair value gap that has been tagged. So what are we expecting from price? We're not really expecting anything here from price. Why? Because the draw on liquidity has been tagged, meaning the conditions right now are very low. What we can expect is an inside candle. Then we get okay, today becomes an inside candle. Then we get a fair value gap right here. We get a fair value gap right here, and then that's what we work with. So it is either that or the this thing, the chart just sells downward from there. Now on if you look at the IPDA look back, IPDA is using time ranges to check where the drawn liquidity on price would be. So if we do a 60-day look back on IPDA, so this is the date measurement. If we do a 60-day look back, so we draw our tool from here to 60 days. So that's 61 days. Yeah. So we draw it from there. The goal of using this is to check during this date span which high or which low has been left untagged. And if you look at it, this low here is the sell side liquidity. Now this low here, since it's the sell side liquidity, that's the internal range structure. Now I want to see what it is externally. So first, on the 20-day IPDA, we had what? On the 20-day, we had what? We had this low as our sell side liquidity. On the 30 days IPDA, we still had what? We still had this low as sell side liquidity. On 60 days, we have this low as our sell side liquidity. So what we're going to do is we're going to take this out before we get any reversal. Now as I said, what's this sell side liquidity? What is it on a daily, on a weekly time frame? On a weekly, on a monthly time frame. On weekly, it is still just a low, right? But on monthly, what is it? On monthly, it is the monthly fair value gap, meaning our drawn liquidity for this month or the next 2 months is still going to be this fair value gap right here. So we're going to target sell side liquidity monthly fair value gap, and that's basically it. So that's the drawn liquidity. So on dollar we have the monthly fair value gap as the drawn liquidity, and also on euro we have the monthly fair value gap as the drawn liquidity. Now the chronicles of entering something like this: first you have turtle soup, so you have TS. Let me put that right in the middle, make this small, and there we go. So we have turtle soup down here, we have turtle soup down here. Then after the turtle soup, what the price tagged the daily fair value gap. So what is next? A breaker. Now what are we going to use as our breaker? Obviously we can't see anything here, right? We have to go down to the 4-hour time frame, then perhaps you can see something. And on 4-hour time frame, can we see any breaker? No. What does this mean? It means we are going to have two fair value gaps to use, which is this one, the first one that we used here, and this one that is about to be created. So we are going to wait for a tag into this fair value gap. So for today, is there any drawn liquidity that price needs to tag? Not really, except we look at it bullishly. Now let's go to 1-hour time frame to see if you have any market structure shift to the upside. Do you have any market structure shift to the upside? No, we don't. And the weekly this thing that we're working on is what? Is bearish. Our weekly profile is bearish. It's still bearish till now. Where did the week start from? The week started from here. So this is the week opening price. Immediately the week opened, we had a buy up, then a sell downwards. And today is Wednesday, the middle of the week. We're supposed to get at least a retracement upward. We're supposed to get a retracement up here, clearing out all these highs. So perhaps something like this. Then we continue the sales. But do we have that? No, we don't have that. And if you look at 5 minutes time frame to check today's profile, so as I told you guys, this is the trading window for London. So that's the trading window for London, and this is the trading window for New York. As you can see, Asia high is still left untagged. So this is Asia high left untouched, which is also the buy side liquidity I marked out before. Asia low is also left untouched. No, Asia low actually has been taken out. So Asia high is left untouched. Then Asia low has been swept. So yeah, in London Killzone we were supposed to have a buy to take out the Asia high, but it was unsuccessful. That's how you know it did as against the range. That's how you know it did as against the range. You can see it is still close to the opening price, which is here. So this down price. So after market opened, it went down, it went up, it went down, it went up, down, up, down. And what is it probably going to do again? It's going to go back up. So until we take out Asia's high, I don't really think, or it shows that there is no clear structure that I can get to from over here. And there is no high impact news this week, meaning the drawn liquidity for the week has been met already in the middle of the week, so you should be expecting a reversal or just consolidations throughout the rest of the week. This is Sunday opening price. It sold right from there, sold on Tuesday. This is Tuesday opening price. I think we had a classic sell day on Tuesday. Yeah, so Tuesday sold too. We should see we took out the drawn liquidity. Immediately after I took out drawn liquidity, price became choppy. It became this very choppy. And on other charts, which is like GU, let's see what is happening there. So I had this marked out for my GU chart. On daily time frame, the GU still hasn't switched to a bearish daily bias, right? But it did a sweep and it tagged a fair value gap. This fair value gap tagged it, and some might be looking at me that, is this actually a fair value gap? Yeah, it is. So yeah, it tagged this daily fair value gap, took out sell side liquidity, and now it's like trying to reverse back up to this equal highs we have over here. And practically it hasn't really taken out any of the it has not changed the trend. There's no trend change on G right now. So basically you can see it has not done like any market structure shifts on the daily time frame. The bias is still left bullish, even though it has been selling for the past few days. The bias is still left bullish. That is why it acts very choppy in Q zones. So you have to, anytime you are trading, you have to take a chart that is very much in sync with the XY. You can see on Monday Killzone, it sold well. Then Newyork Killzone, it just consolidated. On Tuesday, London Killzone consolidated, sold a little bit. Newyork Killzone consolidation. Unlike EU acted way better. So basically, it is the movement downwards is just very choppy. And most times when the movement downward like this is choppy, is because what is happening is just a retracement, right? A retracement for it to go higher. Now, which range are we playing? We are playing this range, this low to this high, and now we got a sweep under the low over here. We got a sweep of the low over here, and now we want another one where we want another one up here. Now we have gotten the sweep under the low. So now on 5 minute 15-minute time frame, we have this fair value gap here that we can use to buy. But is it aligning with any daily buyer structure? No, it isn't. Why is that? Because right now you cannot use Q zones to trade, because it has been choppy throughout the whole week. That's basically it. It has been choppy throughout the whole week, so you can't use Q zones to trade. You're supposed to trade outside of Q zones. London close trading, Asia session trading. If you check Asia session for last night, it was very smooth. It took out this. It did a total soup here, and then it sold drastically till it took out the drawn liquidity. And after I took out the drawn liquidity, we had CPI for GU this morning, 8 o'clock this morning. So after we had CPI for GU this morning, we had like a, what do they call it, a impulsive buy upward, showing the banks want the prices to drive upward. So what are we going to wait for next? The CPI gave it a break of structure, and now we are going to wait for what next? We are going to wait for a retracement to a fair value gap. So basically we have total soup. So this brings me to like the third model that will be taught on this channel. I'm going to drop one model on Sunday. Then we would have another model after that, the week after that. So that would be the third model on this channel, and that would explain what I'm about to trade right now. So we have total soup, then break of structure, this break of structure is not really a catalyst. It's just there to show you like what happened after like price tagged or price took out this equal lows. So it did the break of structure, right? But the whole goal here is to show you this total soup, then this fair value gap that was created here. So now what we're going to do is we're going to ride this fair value gap up here. We're going to wrap it up here. So buy side liquidity. On daily time frame, is our decision right on daily time frame? Yes, it is. Why? Because it got out of the range from this low to this high. It got out of the range here, and now it wants to get out of the range buy side on the buy side too. So we tagged out the range here. Now we're going to tag out the range on the buy side. So we're going to get a retracement from here up here. So that's basically how ranges work, and that's how I'm going to like go about trading this. Here you can say, why am I not using the 4 hour this thing, 3 hour fair value gap, 2 hour fair value gap, 1 hour fair value gap? Because like 15-minute time frame is the best for this type of trading. This it won't fade based on experience. It won't fade this fair value gap over here. And on this type of concept, the time does not matter, the bias does not matter. What you are doing, you are range trading, and when you are range trading, you are going to trade this way. You enter on after every total soup. Immediately after you get the total soup, that's your entry. That's your entry to go upwards. That's what you use to go upwards. So it took out sell side liquidity, total soup here, total soup on this ones too, fair value gap, then buy upwards. So now our buy entry would be set here, stop loss here. That's a 33 pip stop loss. So range trading is usually like intraday. Yeah, it's usually intraday, though it can occur on lower time frames. But then, so what's our range? Our range is from last week highs to, let me go to weekly time frame. So basically our range is between these 2 weeks, 1 2. So our range is between this this low to this high. So what we're looking for is for this high to get plunged, then probably a retracement back downwards. I might take us down here. Again, the reason why I'm taking this buy is because the bias for GBP USD has not been shifted to towards the sell side. Yeah, so leaving this buy side liquidity here vulnerable. The daily bias is still bullish on GBP USD, leaving that very very vulnerable. So yeah, that's basically like it for today. I would keep you guys updated on the Discord on how to go about, on how I would go about this trade. So yeah, that's basically it. Thank you guys for watching, and I hope to catch you on the next one. Adios.